Rafi here from the Endgame Investor. And boy, what a week it's been. Gold, as I speak, is at new all-time highs of $2,635 an ounce. Silver has recovered all of its losses post 50 basis point rate cut when Mr. Slammy came and tried to slam it down, but failed in both gold and silver. We'll be discussing that. Chinese stocks are at long-term support, and the trend line that has been established in the Chinese stock market since 2006 has reversed from support to now resistance. So Chinese asset prices are in big trouble.
In financial news, both gold and silver are surging to new heights, thanks in part to a 50 basis point interest rate cut by the U.S. Federal Reserve. Gold hit an all-time high of $2,635 per ounce, while silver spiked above $31, marking a major rally. This surge follows the Fed's rate cut, the first in over 4 years. The weaker U.S. dollar post-rate cut has made non-yielding assets like silver more attractive, further propelling their prices upward. Interestingly, Farber warns that while prices are high, we may face a brief monetary crunch that could cause temporary declines in both gold and silver. However, the expectation is that these dips won't last long, especially for gold, which is less volatile compared to silver. On the international front, there's troubling news from China.
Trying to regain 50-week moving average versus gold very quickly on the Bitcoin chart. Yes, Bitcoin has been going up lately over the past 2 weeks, to be exact. But it's still struggling at the 50-week moving average here relative to gold. The 50-week moving average is at 24.26, and Bitcoin is slightly down from this chart. This chart is a little bit delayed, so it says 24.49 here. Basically, Bitcoin is challenging, trying to break back through the 50-week moving average. I don't think it will be able to do it, but we'll see. Bitcoin is Bitcoin. It's very unpredictable. Chinese stocks at major support. This is what I said in the introduction. The major support line is at about 2,700. As you can see here, it's been hit 5 times, once in 2016, once in 2019, twice in 2020, you could call it 7 times, and twice in 2024. Once you have this many hits on support, it usually breaks through. But let's look at what is going on in the longer term in Chinese stocks. This is a lot scarier if you're invested in Chinese stocks. We have this same support line, the short-term support line, this horizontal line over here. You can see 1, 2, 3, 4. On the short term, 5 going back to 2016 or 6 or 7, depending on how you want to count it. But we have a longer-term uptrend line from before the great financial crisis of 2008, which really drove Chinese stocks a little bit mad, or a lot bit mad, from 2005 until now, or until, to be precise, somewhere before 2024, is that 2023, 2022, somewhere in there. There was an uptrend, right? And it hit once here, once in 2014, once in 2018, once in 2020, and it broke through finally somewhere in 2022, and now it is resistance. You can see here that we challenged this uptrend line last year, and now we are testing the final support zone over here. So if we break this, the uptrend line that has been in place since 2005 is now broken. Chinese stocks are in trouble, and China being the second largest Keynesian economy in that sense, if it goes through a deflationary spiral, the rest of the world will follow, and then there will be the final round of money printing. All this stuff is going to happen at the same time in unison, and we will have our end game. Another wave of food price inflation in China, meanwhile, while the Chinese asset prices are falling in a potential deflationary spiral, what we have here is a new upsurge in Chinese food price inflation, basic necessities. You can see the reason I put it back to the 1990s here is to show you that surges in Chinese food prices tend to be long-term, right? Once you are out of a deflationary epoch here, or time frame, time period, whatever you want to call it, usually food price inflation increases for the long term. So here we have, it's at 3.2% or something like that right now. This is the beginning of a new surge in basic necessities, increases in food prices in China, while the asset prices are falling. It's stagflation is what it is. And that is a very big problem for the Keynesian world that we live in, but a good thing for us stackers. Platinum to silver ratio approaching end of a 26-year triangle, okay? you have the opportunity, if you would like to exchange some silver for some platinum. I myself only have 1 ounce of platinum. I exchanged it for about 34 ounces of silver. I spoke about that story a few silver reports ago, a few months ago. If you would like to have some platinum and you have a little bit too much silver to carry or to handle,
Chinese stocks have officially broken a long-standing support trend dating back to 2006 and are now facing resistance. This, combined with an emerging wave of food price inflation, signals a potential deflationary spiral that could affect the global economy. Farber highlights the risk of global economic turbulence if China, the world's second-largest economy, experiences a severe downturn. Additionally, Farber notes that the platinum to silver ratio is nearing an all-time low, presenting a potential opportunity for those looking to diversify their metal holdings. Platinum is seen as less liquid, but currently priced attractively, making it a good trade for those holding significant amounts of silver. Lastly, geopolitical factors are at play with increasing tensions in the Middle East. The potential for prolonged conflict could influence market stability, further affecting the prices of precious metals.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
you can exchange about 31 ounces for it for a nice ounce of platinum. And I don't think you're going to get much better prices than this ever. We have a descending triangle that is going to break out to the upside at some point soon. It is on its convergence point over here. It started since 1998. So this could be one of your last chances to exchange some silver for some platinum if you're interested in platinum. Silver is a money. Platinum is a less good money. It's less liquid, but it's at such a good price that I would be tempted to exchange more silver for platinum if the opportunity arises and I can find a coin shop that can supply it here. Mr. Slammy fails completely. Gold edition. This is about the attempt to slam the price of gold and silver yesterday. You can see here that this over here post the FOMC meeting and Powell's press conference. So gold went way up to an all-time high, just about 2,600 in London prices. And then Mr. Slammy came and slammed it down to below 25.50, I think about $53. And then Mr. Market responded and we're back up to an all-time high. Now, we're going to go into silver edition of the same thing. You can see here the 50 basis point cut over here rose silver to a high of somewhere around $31.30. Then Mr. Slammy came in and eventually failed after a few hours, and we're back at the highs here in silver. So the question is, was this an attempt to slam down, or was it something else? And the open interest can answer that question for us, because we can see here that the open interest is at 545,000, right? It hasn't gone down from these numbers over here. This one says 538. The current number is 545, so open interest went up, right? That means that more contracts were opened by short sellers, and those contracts were met by longs at higher prices. So the opening up of more short contracts, for every short there is a long, obviously, did not bring the price down, only very temporarily, ephemerally for a few hours. And the longs are back in control here. So the slam did not work in gold, and we're not in a short squeeze yet. But the shorts keep opening up new contracts at ever and ever higher highs here, so they are in trouble. To give you a longer perspective here, this box over here is still ahead of us. The open interest in gold, the all-time record was just before the 2020 slam down, and around February of 2020 at 800,000 contracts. We're nowhere near that now. But what I'm saying is that before a financial crisis, usually you have an incredible rise in open interest in gold. I don't know why that is. I don't understand the mechanics of it. I'm just saying it happened here. And then you had a huge slam down to 1450. It scared the pants off of a lot of stackers. It doesn't look very big on this chart, but it was very big at the time. So if we start to see open interest really climb high, like towards 700,000, 800,000 contracts, that could be a signal that the final slam is ahead of us. Just be careful of it. It might not happen. Just be emotionally prepared if it does. This is also still ahead of us. This little peak in open interest here in silver was also an all-time peak going back to 1980. 1980 was higher, but this was the peak excluding the 1980 silver parabola, and it brought silver down to somewhere in the $11 range, freaked everybody out. So if we see silver open interest climb to about 240,000, it's right now at about 140,000. We're nowhere near there yet, so we're in a different situation. Just be careful of this and be advised that it could happen and be emotionally prepared. Now, the final thing I want to go into is the war on cash. Right, this article I just saw, I will translate it as I read it. This is in Hebrew. It's about the 200 shekel bill as a war is going on between Israel and Lebanon and Syria.
Investors are keenly watching economic data, including U.S. GDP and jobless claims, as these indicators will provide clues about the Federal Reserve's next move and its impact on global markets. In conclusion, while gold and silver are enjoying a strong rally, Farber suggests we are still in the early stages of a larger economic upheaval. He advises investors to brace for potential short-term price drops, but remains bullish on the long-term prospects for precious metals, particularly as central banks continue to adjust monetary policies.